Thank you, everyone who's starting to join. We're just going to wait a few seconds here while more people get on. Okay, thank you everyone for tuning in. I assume a few more folks will join in the next minute, but we're going to get going. My name is Helen Wiley. I'm our Disaster Preparedness Program Director at SBP. It's a pleasure to have you all on with us today. This two-part series on disaster preparedness in your communities is being done in partnership between SBP's preparedness program and our SHARE program, but we have many disaster assistance and government partners on as well today. A few housekeeping notes. This session is being recorded. For anyone that needs to leave early, we'll be sending out the recording following the session. And we're going to be using the Q&A box today for any questions you have. So as I go through the presentation, please feel free to share your questions there. And then please feel free to use the chat function if you want to introduce yourself to other attendees or pose anything else for discussion there. So this is a two-part series. Today we're going to do a deep dive on making recovery plans in advance and what we mean by that. And so this presentation is very much framed for all of you working with different community members and households of the types of information we want them to know. And so therefore, as you're thinking through the ways you interface with them, things that you might want to build into your public education and outreach. For those that are not as familiar with SBP, SBP's mission is to shrink the time between disasters and recovery. We have 5 different interventions at our nonprofit, and preparedness is one of those 5 interventions, as well as SHARE. Our leaders from SHARE will be sharing a few things at the end of the presentation today. So we're going to briefly go through, for those of you that don't know as much about a preparedness program, some of the tenets and programmatic things that we do, what we mean by building a culture of preparedness at SBP, and then what we believe goes into making recovery plans in advance at the household level. So our preparedness program at SBP aims to equip not only households, but communities as a whole with the knowledge and capacity to make informed disaster preparedness decisions and ultimately build more disaster resilient communities. We need everyone involved at the different stakeholder levels to be engaged in order to really build towards this larger goal. If you're interested in learning more about our specific program, there's the website listed here where you can check it out. In particular, we do a lot of different types of trainings for these different stakeholders. And so if there's a type of tailored presentation that you're interested in the future, please let us know. And we do a lot of pre-disaster education, and we do this not only through different trainings and presentations, but also through the creation of new resources, including our written guides, videos, and checklists. We have fantastic e-learnings online, and we disseminate these not only through our website, but also through our phone application, which is geared both for pre-disaster planning and also post-disaster recovery. On the flip side, SBP, in our strengths as a recovery NGO, has a lot of fantastic post-disaster education, which are also available at our website and on our Equip app. And so if any of these resources would be of use to you and folks that you serve, please feel free to check them out. So now on to what we mean by building a culture of preparedness. For all of us that work in this space, we unfortunately know that there will be a next disaster. It's not a question of if, but when. And so there's important steps that we can start taking now, not only for our own families and community members, but to better protect the financial future of everyone in our communities before it happens. And so when we think about preparedness, what's really important, and here I've put up, the National Disaster Recovery Framework. Preparedness is really an ongoing activity. We can't think about it just being pre-disaster, but instead it extends all the way throughout the disaster cycle. Just the level of engagement that we're doing at different periods looks a bit different. So, those of us that are working particularly in communities, we really, again, have to have every level engaged in building this culture of preparedness. But really, where it really starts is we need individuals at the household level to take as much responsibility as possible for their preparedness, so that those of us in NGOs and local government can focus on the most vulnerable citizens. So those that are disabled or elderly or with small children, who are going to need the most help post-event. And so getting more individual households prepared enables us to really narrow in on those most vulnerable citizens. So, we're going to talk a lot today about what goes into making recovery plans, but it all starts, of course, with better knowing the risks. And as I'm sure many of you are aware, extreme weather events are becoming more frequent. When we think about flooding and hurricanes in particular, just all around the country, areas that have never flooded before are having increased flood risks or seeing very significant flooding events. And so it's really important to move beyond just relying on our federal flood maps, because so many of them are out of date. And we need to look at as many different sources of flood risk data as possible when engaging in community decision making, and what that means for public education around risks and planning. This was a report that came out last year, but it's really significant that 90% of US counties have experienced a natural disaster serious enough in the last 10 years or so to receive a federal disaster declaration. And so, this frequency of extreme weather events has become severe enough that the majority of our country has seen this occur in the last 10 years. Our top recommendation at SBP, particularly when you think about household level and where to point them for good resources, is to use riskfactor.com. It was created by the First Street Foundation, which is a nonprofit organization that's brought together a lot of different sources of flood risk data, wind data, fire data, etc., that enables users to look both at the individual property level or zip code level and get a score between 1 and 10, telling them about their risk for flood, fire, or wind. And so it's a great tool that's now been integrated into a number of real estate websites as well, to help give more folks familiarity with what their risk level might be and therefore engage in better planning. Another great resource that many of you might be familiar with is the National Risk Index, which has just been undergoing another update. But this is something that the federal government collaborated on across different federal agencies to integrate, at a more aggregated level, risk information and social vulnerability information, so you can understand how particular counties and census tracts overlap with or compare to other areas across the country as you're thinking about, what type of local engagement or where to prioritize resources within a given state. And then, we're all quite familiar with, when it comes to knowing our risks, there's a lot of great apps and resources to be pointing households towards in the days leading up to an emergency event. The Red Cross has a great app that puts out various automatic alerts, but as much localized information in weather apps as possible is really helpful for people staying in the know on what might be occurring in their area. That being said, technology, as we know, may or may not work if you're seeing a severe weather event. And so having folks start putting into place their plans for what they'll do in the event that they lose access to information when a hurricane is making landfall. So we're going to get now into the bulk of what we want to talk about today, but kind of setting up this risk context is important leading into it. I want to share a story really quickly from one of our clients at SBP, which points to what I just shared on staying in the know, that this was a client of ours who lives down in Naples, Florida. He and his wife, were having a hard time deciding whether or not to evacuate before Ian touched down, and they didn't plan on losing power so quickly and lost, access to any type of information. And, as Bill here noted, you have no idea, no control. And once the communication is down, you're at the mercy of whatever happens. And I think time and time again, we hear this from our clients around the country of just how hard it is to make that decision in the moment. And so emphasizing and sharing these stories with other people who are highly vulnerable is as important as they try to make plans on what to do pre-disaster. And so, continuing to encourage folks to evacuate, even if they get evacuation warnings frequently, if they live in an area like Florida that sees severe weather events every year, it's just really critical to get folks out. Bill and his wife are okay, but they did ultimately lose their home from Hurricane Ian. And so starting to put together a preparedness plan, what we're really trying to do in building this larger culture of preparedness is moving beyond just having folks put together their supply kits and emergency plans, but making what we call a recovery plan. So just really briefly, when we think about emergency planning, there's these supplies we need people to get in place. It looks a bit different if you're talking about a hurricane versus if you're sheltering from a tornado. But by the different types of events, having the right supplies, preparing for power outages, preparing for if you would evacuate or shelter in place are all these basics, that there's a lot of really fantastic tools out there, including from the Red Cross, to guide you through. I've listed here a few examples of different things that should typically go into disaster supply kits. We want to emphasize in particular, for older households that you and others you work with might be working with after an event, that it's quite typical that, if you're displaced after a disaster event, you may not have access to your normal doctor. And so having all the contact information that you need for folks and a plan in place to redirect to get your prescriptions filled elsewhere can be really important. So leading households through that type of planning. So now getting into the meat of it, we want to lay out here for you that those who might be less familiar with how complicated the disaster recovery system is for households, what it really looks like at the household level, and therefore what it means in terms of you at your own organizations or the organizations you work with, of what types of resources are out there and how to help households navigate these. So there's 4 major sources of recovery funding at the household level: savings, loans, aid, and insurance. And in an ideal world, what we'd want every household to do is go through an exercise in making their pre-disaster plan for recovery on what of these different sources of money could they actually rely on if a disaster occurred. Does that mean rebudgeting to set aside more money for unexpected expenses? Does it mean meeting with a financial counselor in order to go through that exercise to rebudget? Tough things that no one really wants to think about in a non-disaster period, But what is really critical to actually get prepared in advance is knowing what you could rely on if something occurs. And so with savings, many of our most vulnerable households don't have a lot in emergency savings, and there's only so much we can do to help them rebudget. But it really is important that we're encouraging folks to set aside money if they needed to shelter away from home for multiple days. I think if someone actually loses their home, a 2 or 3 day estimate would really be short. But if you're talking about just evacuating for a short period, that would be typically the minimum amount of time you need to be away. Another challenge, and we're going to talk a lot more about insurance, is that a lot of folks who have either homeowners or flood insurance really don't focus in on the fact that they're going to be responsible for paying a deductible before they would be getting their insurance claim. And so getting folks to save for their deductibles is a critical part of pre-disaster planning. We also see a lot, and as some of you might see as well, that there's all kinds of unexpected expenses that come up post-event. And so having an emergency cash for these things is really important. Something that, while not the largest of costs, is a really tremendous nuisance to folks is, if you're fortunate enough to have a generator, but there's caps on how much fuel you can go to pick up at any given moment after a major hurricane, that the repeat trips to go buy fuel and just paying a lot of money to keep getting fuel to run your generator can really be hard for households. A lot of households don't know when there's a federal disaster declaration and federal assistance comes into play, that before they'd be able to access disaster aid through FEMA, they're first going to be directed to the Small Business Administration, which offers low interest loans to homeowners and renters in regions affected by declared disasters. And so making sure in how you're working with households, particularly if it's post-event, that they understand that, the SBA is involved in this process, and because it's just confusing that it's the Small Business Administration. But, credit and loans are something that, whether there's a federal disaster declaration or not, are one of the things that if you don't have savings, getting a loan or accessing credit can be an option to help pay for some of those unexpected costs up front. Aid is, what most people think of when they think of a disaster and how they're going to recover. And so the challenge is, and I'm going to spend a few minutes talking about this here, is that folks assume that they're going to get a lot more money from federal disaster aid than they do, in fact. But what a lot of people also don't realize is that they may or may not actually qualify for federal disaster assistance. So with this increase in extreme weather events that we see around the country, it's important that regardless of if someone themselves had previously received aid or just moved into a home or area and therefore doesn't know if a past occupant of that home had taken out federal disaster aid, we need households to investigate whether that they would qualify. The way aid works is it's only supposed to be really there for a household once. And so unless a household takes out insurance coverage for a like event, so if you had a flood in the past and someone who lived in that home got disaster aid, unless there's now flood insurance coverage for that home, any future occupant will not be able to get access to disaster aid. So really encourage folks to have households call FEMA to find out if there are any insurance mandates for their properties. The other thing that's important is for households to understand that not every disaster is going to be big enough to trigger a disaster declaration at the federal level. And so thinking through these other pathways, whether it's insurance, which we're getting to, loans or savings, that you can't just rely on the federal assistance to be there. Even when it is available, we know that the grants are often very limited and they can take an extended period before they actually become available. We do, however, highly encourage you, if you work with households directly, to get them to not only apply for disaster aid if there's a declaration, but also appeal disaster aid decisions, because it is, as I said, likely going to be the only time that particular house can receive disaster assistance, and therefore you want to maximize the FEMA award amount. At SBP, we have a very robust FEMA appeals program, and we've seen that survivors for whom we help file an appeal on their behalf have seen a 66% increase in their total FEMA award. So at least $8,000 additional dollars on average of funds is given to each individual. This is obviously not an insignificant amount. At SBP, we do train the trainer sessions for other organizations who might also want to do these types of appeals. But we have the webpage here for that program and can be a great resource should a disaster occur in your area to better equip households in their recovery. But we encourage you and your orgs to be thinking about this in advance and how you would be aiding households in their recovery and appeals should a disaster occur. So we just went through 3 of the 4 recovery mechanisms, and as you might be thinking, there's some challenges here. Well, my background is in research, and what the academic literature really shows us is that low and moderate income households suffer disproportionately and recover much less quickly than better off households post-event. But financial resilience, so your ability to recover from an economic shock, which a disaster event is, underpins all other aspects of recovery and is absolutely necessary if we're trying to build broader community and disaster resilience. And so this is why we're making the recovery planning such a central part of pre-disaster planning and preparedness. So for our most vulnerable households, you really have the challenge that they might have no savings, limited access to credit. We just went through some of the challenges with disaster aid, but getting insurance coverage for more folks is also very challenging, as uptake, particularly for flood insurance in the US, is very low. That being said, I'm going to, you're seeing here some forthcoming research results from a survey that was done of hurricane survivors from 5 different hurricane events in the last few years around the country, and what types of recovery funds that they were relying on post-event. And what this research is trying to document is the role that delays play in the individual level recovery of different households. And so what you see from this particular graphic is that FEMA grants, so disaster aid, on average is taking those that participated in the survey much longer to be received than money that would be coming through local government or flood insurance. So, while we're going to go through some of the challenges with insurance here, we're also going to talk about ways to make it more affordable for households. And our really top recommendation is to work with households on ways to get insurance coverage, or ways at the community or NGO level to help subsidize and make it more affordable. Because while we don't want people to live in areas that they shouldn't. We have millions of households for whom it's going to be really hard to relocate out of high-risk areas, and enabling them to get insurance coverage allows them to be much more independent and self-reliant in their recovery should an event occur. So just for comparison's sake here, you can see, and this is FEMA data, but the average FEMA disaster assistance grant only gives about $5,000 per household currently, but the average flood insurance payout through the National Flood Insurance Program ends up being about $69,000. So from a overall perspective of, how to really get families assistance, insurance would obviously be more ideal if we can figure out how to make it affordable for them. Something that we see a lot of confusion with at the household level, and some of you might have encountered as well, is that, homeowners insurance and flood insurance are different. There's also options for renters in terms of disaster insurance coverage, although very few renters currently purchase. So here you can see, what are the standard parts of a homeowner's policy and what would be the standard parts just for contents only coverage if you were purchasing at the renter level. Well, what people get so confused about when a disaster event occurs is that flood is actually excluded from pretty much any homeowners or renters policy. And so when we're doing local preparedness and education campaigns, we really need to help people understand what is or isn't included in a policy should they have one. Of note, if anyone is in an area where there's earthquake risk or landslide risk, those types of natural disaster events are also excluded from most homeowners policies, and folks would have to purchase a separate policy for that coverage. This is a really great tool that came out recently through a center at the University of Rutgers. And it's a really helpful tool that folks at the household level could use that you might want to share with them, that ranks all the different companies that offer homeowners insurance around the country, and different factors like how good the coverage is, how well it corresponds with risks and what it pays. And this chart is an overarching one, but there's also a breakdown by each individual company on some common challenges that policyholders incur. And so I would encourage you all to check that out and possibly consider directing households to it. As we've shared, flood insurance is not covered by standard homeowners policies, but it really is our top recommendation that anyone with any level of flood risk should have flood insurance, including outside what is considered the mandatory flood insurance zone. What's important there is it's actually a lot cheaper to get flood insurance if you're not in a mandatory purchase zone because the risk is lower. And so, that's actually where we can move the needle a bit on trying to get more folks to purchase, even if it's not mandatory, but at a much lower rate than if it were mandated in a higher risk zone. We need, as a whole, greater education for actual insurance agents about natural hazards, but encouraging households you work with to not only ask their insurance agent about National Flood Insurance Program policies, which is the program through FEMA, but also what private flood insurance options might be available in their states. There's a lot more private flood options starting to become available in different areas. If anyone is joining us from Puerto Rico, for example, given challenges with the National Flood Insurance Program there, private flood options have really taken off and had more success of gaining trust with a lot of households. And there's now enabling legislation there for what's called microinsurance, so partial coverage policies that are more affordable for a lot of households. We have various resources on our website that can lead households through insurance questions to ask their agents. And so we'd encourage you guys to share those with people you work with. The other things we want households to be doing when they're engaging in insurance preparedness is, one, not only checking if their homeowners or renters policy covers flood, but saving for deductibles, which we talked about in terms of overall saving issues, setting aside emergency cash for, again, these other expenses that can come about, but also, things like buying a tarp, etc., that could cover your roof and prevent further damage from occurring post-event from, additional rain, etc. And then making a home inventory, which I'm going to discuss more in a bit. Something that comes up a lot that can really confuse households is that for those that do have a mortgage, we'll see that households are upset because they haven't gotten their insurance payout yet post an event because the mortgage lender is holding it. Well, what we need the household to understand is that, if you're a mortgage holder, the insurance contract is actually between the insurance company and the owner of the property, which is actually the mortgage holder. So once the total cost of damage reaches a certain level, a lot of insurance companies are legally required to actually put the check in the mortgage company's name on the settlement check. And so what some companies will do, for instance, is not release the money to a household all at once from the claim check, but do it in installments, in part to prevent, a contractor coming in and trying to defraud the household by taking the whole insurance claim and running with it. And so it's one way for a mortgage company to not only protect themselves, but also the homeowner by not releasing that payment all at once. However, if a household has a lot of concerns there on how long it's taking to get the funds from their mortgage company, they should absolutely investigate their mortgage company's process and talk to their loan agent about if there's anything they can do to get the money released more quickly. If folks have a national flood insurance program and are concerned about, one, the amount of money that is going to be paid in the claim, they should contact either the National Flood Insurance Program if their policy is through them, or one of the best things to do is actually to contact their state's Department of Financial Services or insurance. Insurance is regulated state by state, and each state Department of Insurance has a division of consumer services whose whole job is to make sure that insurance products are serving clients well, consumer protection. And so, encouraging folks that you work with to contact that division not only can help them reach a solution for themselves, but let the division know if there's larger issues with claims. Another good resource is United Policyholders, who's a nonprofit, and they have a lot of great resources online for all kinds of different insurance issues, and can be a really good resource to help individual households navigate both, what insurance options that they're purchasing or considering, but also navigating recovery. So, in working with different households and communities across the country, working through insurance affordability is tough. So for those of you that don't think as much about insurance normally, there's a few things here on the flood insurance side of understanding why insurance is becoming more expensive. So there's a number of different factors here that go into how an insurance rate is determined. And these are the things that the National Flood Insurance Programs considers as factors, but also most private flood options that replicate or are very similar to the National Flood Insurance Program. So not only, what the flood zone is, what type of coverage is being purchased, is it structure only, or is it also contents? But, are you having a low deductible, a high deductible? How old is your building? Where is it located? These all impact what the rate will be. Well, the National Flood Insurance Program is a 50-some-year-old program, and it had grandfathered rates where a lot of properties had artificially low rates that did not actually correspond with the current flood risk level. And so FEMA went through a very complicated process to finally make some updates to the rating system that the NFIP uses. Risk Rating 2.0 was released about a year and a half ago, and it includes a more comprehensive analysis of flood risk for each property, including those factors showed on the previous slide. The idea behind it is to try to make insurance rates more equitable by getting rid of those rates that were artificially low in previous periods, particularly for much larger expensive structures. They've had some challenges, though, in rolling out the new rating system, that there's not as much transparency as there was in the past with how rates are calculated. And so FEMA continues to say that they will be releasing additional information under the new system, but there's still a lot of work ahead in better disclosing for individual households how their rates are being calculated. There's also a challenge that because there is not what we call a means tested program, i.e. having more subsidization or incentives for a low income families specifically to be able to afford insurance, is that folks being covered under the NFIP are paying rates not only of their wealthier households, but also those that are lower income that are, corresponding more with current flood risk, but therefore having more affordability challenges. A few things here on what we can and can't do to work on affordability. When we think about insurance as a whole, so if you look at like auto insurance, you have the vast majority of people with cars in the US purchase auto insurance. And so that means that there's a very diversified car insurance risk pool. So as an insurer, you can calculate roughly the number of people in an area that might have an accident in any given year, but all the premiums from other policyholders in those areas will offset the cost for those that do have accidents. Well, in the disaster insurance space, we do not have that same type of diversified market. Instead, only those that are extremely high risk are purchasing insurance, which means that the coverage as a whole is way more expensive for anyone who does have a policy. We also have the challenge that smaller, more frequent events are not cost effective for an insurer to transfer the risk away from the household. And so most policies have a certain threshold, including the deductible, before the insurer will be paying out on a claim. There is some that insurers can do to help better balance this risk pool. And so what they do in the disaster space is transfer the risks by pooling disaster insurance from one area with a different market in a different part of the world, and therefore try to diversify across this larger insurance pool on what the risks are and how many payouts they could have in a given year. In the absence of federal flood reform, where we would have a means tested program for low-income families to afford insurance, there's a number of great options that are being explored around the country to help make flood insurance more affordable for low-income families. I mentioned already that Puerto Rico has enabled a microinsurance market to come out, where there's a lot of private companies coming to the market. They're offering partial coverage options, which is better than nothing for low-income families to get some assistance very quickly through insurance. There's also a number of flood insurance affordability programs that different local jurisdictions around the country have put in play. For instance, Portland, Oregon, a few years ago adopted a program using elevation certificates, consultations, and home audits to help save households in a particularly flood-prone neighborhood on average over $700 annually. One of my favorite pieces of that program is that they helped cover the cost of getting elevation certificates for different households. Elevation certificates are what you can use through the National Flood Insurance Program and other programs like it to certify what the exact elevation of a structure is. And that's important because while they're no longer required for the National Flood Insurance Program, they do verify the exact elevation of a home, which therefore makes it easier for any agent to give additional discounts on what the policy would be, because you can't give a benefit of the doubt on the exact elevation of a household structure without certifying where it's at. And so since Risk Rating 2.0 came out, which eliminated the requirement of having certificates, I have heard from several insurance brokers that still getting a elevation certificate is one of the best ways to quickly cut costs of insurance. On average, elevation certificates, depending on where you are in the country, can cost between $800 and $1,500. And so it can be a good thing for NGOs or local government to consider putting out grants to cover the costs to then make insurance ultimately more affordable for households in their area. I just wanted to say there's a lot of great examples of ways to make flood insurance more affordable and things that different entities are trying out around the country. So please reach out to us if you're interested in learning more about those. So I'm going to end here by talking a bit about securing documents, which goes into this overall pre-disaster recovery planning and financial preparedness. There's 4 different types of documents that we want households to be securing pre-event. So personal, household, legal, and medical. And we have more comprehensive guides online, but you can see here the types of things that we want people to be having secured, whether it is through a flood-proof bag or in a fireproof box or by uploading to a secure server. And the ones that matter the most, depending on a household situation, are, for instance, your driver's license, your social security card, passports, those things that are going to be important for verifying your identity should you be applying for disaster aid or putting in an insurance claim after a disaster event. There's also a lot in the emergency contact space that becomes important, whether people are sheltering or evacuating, and being able to contact their loved ones, but also knowing things like who are the service providers and utility providers in their area and what are their numbers if they're going to need assistance after an event. Financially and legally, there's a lot of things that come into play, whether, again, folks might be applying for aid or putting in for insurance claims or even applying for a loan. Most importantly, if someone is a homeowner, it's important that they have their titles and deeds up to date. FEMA has made it easier now that if, for instance, property's been passed down through family and the title hasn't been changed, that if you're applying for assistance, it should be a bit easier now to be able to get assistance, even if there's some title challenges. But it really is best to be working with households or directing them to housing counselors and agencies that can help them straighten out any title issues in advance of a disaster event. Same for cars. So many folks lose their cars in major disaster events. And so having the information on hand, whether it's virtually or stored securely in person, so that whatever you're applying for or putting in a claim for post-event, that they can proceed with it much more quickly, because as I mentioned, the amount of timing it takes to access resources post-event will ultimately impact how quickly a household can recover. And so by better storing these documents pre-event, they'll be able to proceed with their planning and recovery post. On the medical side, if folks evacuate, they're going to often be not seeing their normal care providers post-event. And so something great that NGOs can work with vulnerable households, particularly in elderly populations locally, is going through with them, to what are all their current prescriptions, helping them to upload it to whatever online portal system their provider might use, or coordinating with a family member or family friend on what is the plan for that individual and how can they access quickly what they need post-event if something occurs. Here again are some of the options for how folks can store information. For those that are both at risk for flood and fire, using a lockbox that is both fire and flood proof could be the best option for a physical securing mechanism. Flash drives are also good though, since they can be, they're small, you can put them in a flood proof bag, you can easily take them away with you if you're evacuating. But as much as possible, virtually storing documents is good. And the other thing is, if households have recently gone through a disaster event, they will have collected a lot of this important financial and personal data already. So is there anything that your org can do to help them organize that information, in this post-disaster period, so that they have better access to it should another disaster occur? So with that, we covered a lot here today on knowing the risks, what goes into, what we need folks to be planning for in advance and as part of the recovery, things specifically around the importance of insurance and accessing insurance, and then better protecting important documents. In part 2 tomorrow, my colleague Tessa Barron will be going through mitigation options for protecting homes. And so much of this builds off of what we talked about today, and linking insurance and mitigation, knowing your risk and exploring your mitigation options. But we'll continue the conversation tomorrow, and we hope that you'll join us again for that. I'm sharing here, again, the link to our resources page online, as well as our phone application that you can direct households to. And then finally, I wanted to share that we'll be sending out a very short survey along with the recording from today's session. And please ask that you take the time to do this survey to help us evaluate learning from these types of trainings and what additional information you'd like to see shared. So with that, here is our email address if you have any questions. But we'd now like to open it up to everyone who's been putting questions in the Q&A for any questions, and then we'll open it up to our share partners at SBP for a few comments.
Thank you so much, Helen. Our first question from the audience today is, are there any opportunities for low or fixed income disaster survivors to work around a previous flood insurance requirement?
That's a great question, Whitney. It depends in some extent to the situation. One thing that is important is that if, and I don't think this is going to be the situation that you're asking about, but after folks get disaster aid, in some areas, FEMA will actually provide a 3-year insurance policy free of charge to cover that household. So depending on how long it's been, that's one thing that's a way to get flood insurance for at least a short period on that house. But in terms of working around it, I'm not aware of situations where FEMA would remove a flood insurance requirement unless the home were to be substantially elevated or something like that, which would completely change, the flood risk for that particular property.
All right, thanks, Helen. And then our second question is, are long-term recovery groups able to cover flood insurance costs, or does that depend on the specific LTRG?
I don't know that a specific, the LTRG as a whole could do it, but a particular NGO that is within a recovery group could certainly take on subsidizing or covering the cost of a flood insurance premium for folks in their area. We haven't seen that yet with LTRG members per se, but SBP is actually a partner on a pilot in New York City where a nonprofit organization there that works with households and homeowners throughout the city just purchased a bundled insurance product that they're going to use to fund a emergency cash grants program for low-income households in a given area of the city, should the triggering threshold be met for that product. And so it's a very new thing that has been done, but examining not only in how that pilot goes, but things that SBP and other orgs are trying to now explore of, there's absolutely more ways that nonprofits can help subsidize the cost of insurance. It's just important to think about also, should you start doing that, does your group have the funding to subsidize or cover costs long term, or is it intentionally just for a short duration? Is it kind of doing a larger amount for 1 year and gradually scaling it back? How are you tailoring that with maybe financial planning for that household and linking them with a counselor? But please feel free to reach out to us directly if it's something you want to talk more about.
Thanks, Helen. And our last question is, are there any mitigation options that can help reduce insurance costs?
Yeah, thanks for that, Tessa. Well, I'd encourage everyone to join us tomorrow because there's a bunch of particular options with flood mitigation that can help reduce insurance costs. Tessa will be sharing more about this tomorrow, but we absolutely advocate for fortified roofs in the country. Those can really help with your homeowner's insurance cost. And depending on the state where someone's located, there might be agreements between the Department of Insurance for the state and insurance companies on what types of premium reductions that they will put in place for households should they take certain actions. So please come back and join us tomorrow to learn more about mitigation and linking it with insurance. Okay, well, with that, here's our email address. So please feel free to follow up with us over email. And I just wanted to turn it over to a share partner. This, as I mentioned at the beginning here, we are the Preparedness Program at SBP, but our share program gives out grants to NGOs and long-term recovery groups around the country to do their own rebuilding. And so just want to turn it over in case Share wants to say anything to those that joined today.
Hi, Helen. Thanks. This is Angela Calabro with the Share team. I think I may know a few of you. Maybe we've worked together before. And so just thank you if you're joining from the Share side of things. Thanks for joining. And just to reiterate what Helen said, we do have a few open grant opportunities that Tessa put in the chat a few minutes ago. I can also put it in there again if anyone's interested. And you can check out that same link for other training opportunities you have. We have kind of a series of various trainings over the next few months into the summer. So if anyone's interested in registering for those, that link will provide you with all of the registrations for that as well. So just wanted to put that out there and thank everybody again for joining if you're coming into this as a share partner. So thanks for joining, and Helen, I'll hand it back over to you.
Great. Thanks, Angela. And thank you everyone for joining. Please join us for tomorrow, and please keep an eye out both for share and prepare webinars and resources that might be released or coming up in the coming months. Thank you all.